Good morning, everybody. Hey, welcome to this Friday, the 22nd of March. We got one more week left in the quarter, and glad you're with us this morning as we head in. Yesterday, not a bad day on Wall Street. We continue to follow through with some green ink across the board. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget and let's remember that there are so many things that you and I we have no control over. However, you can take control of your portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have in that portfolio. The closer you get to retirement, the less risk you need in your portfolio. Give me a call, 863-382-0037 to schedule your core retirement design. With that, we got Dave coming next.
5.7 Highlands Light FM. We're at 8:42 here. It's 18 before 9. Got 67 degrees and a little rain in the area, and we're going to kind of see that. What you see is what you get for about the next 24 hours or so. It's time to check in on money and find out what Wall Street's happening to. Interesting yesterday, another big up day. Let's see if we can sort through it with Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Hey, good morning, Dave. I'm a little wet, but other than that, I'm doing well.
It was kind of drizzly when I came in way early this morning. I'm looking through a crack in the window. Barry was fogging up the newsroom windows before he left. I can't really see that well, but I see a little bit of sunshine out on 27 right now. It might be just temporary, but it's going to be kind of wet for a while.
Yeah, it is. It's going to be one of those days. I'd like you to talk to Alan Archer and see if you can get a little break in the rain tomorrow, because I got to cook pancakes tomorrow at Avon Park, whatever they're doing downtown tomorrow. So I'd like it to be cleared up in the morning.
Oh, I got you. Yeah, that's right. The Action Club is doing a pancake feed in Donaldson Park tomorrow. It's Spring-a-Palooza, aren't they?
Yep, and I volunteered to cook, so
I knew I could count on you to help the kids out. Sounds like a big deal. I've been covering it on the news all morning for tomorrow in Avon Park. Spring-a-Palooza's back. Yesterday was kind of a Lollapalooza day again. We ended up up marginally at 8:30 when you and I got done talking. Market opened up to the good about 9:30. And then we got a bunch of the interday reports that you and I don't get a chance to cover early in the morning. They were all positive, and I watched the Dow and the S&P both just basically ratchet up and reprice themselves on good news economically again. I gather housing kind of led the news, didn't it?
It really did, Dave. I mean, existing home sales came out yesterday morning, and I'm thinking it blew it out of the water. The expectation was that it was to be about not quite 4 million, and it ended up being almost 4.4 million, which was about 0.4 better than expected, and better than the 4 million we had last month. So I mean, it looked to me like existing home sales were on fire and selling like crazy. So that was good news. And then we had the leading economic indicators came out yesterday, better than expected, up 0.1%. They were expected to be down 0.1%. And the last month they were down 0.4%. So, man, I'm looking at the numbers and I'm thinking, man, I just don't see how the Fed can think, if they're looking at the numbers I'm looking at, that we need to reduce interest rates.
Yeah, there's an old rule of thumb that bad news is good news and good news is bad news on Wall Street. We're into that mold right now where good news is good news for equity investments. And, I always giggle when I use the old Greenspan phrase, irrational exuberation, but you and I pretty much kind of are on the same page that the economy is doing very, very well, but inflation is not under control, and we haven't cooled it off one tiny little bit. I still don't think politically a rate increase is going to happen this year just because we're in a political year. But, the Wednesday vibe out of the Federal Reserve report, 3 rate cuts still on the table. The economy's getting stronger. And, the index is all closed with at least intraday highs, and the S&P gave us another all-time high closing as well. I'm trying to figure out where anybody's getting the idea that we could possibly swallow 3 interest rate cuts this year looking at the way it's going. We don't need to heat the economy up anymore.
No, we don't really. And so, I mean, there's a lot of expectations. And, to me, if we don't meet those expectations, that's going to put a hammer on the markets and they're going to slide but like crazy if we don't see those rate cuts really hit between now and then. I got to think that some of it, I saw an article that for the first time in 700 years, Dave, the worldwide
700 years.
population is going to decline over the next
Ooh.
decade.
Wow.
Interesting, huh?
Well, that's one of the reasons that they're concerned about Social Security here. Not as many
Yep.
of the young'uns in order to support us old coots when we start taking Social Security heavily.
Yeah, exactly.
Worldwide, though, that's fascinating. Not a lot of economic reports out this morning. A bunch of tidbits out off of the reports just to set the table this morning, talking about the intraday highs. The Dow set an all-time record intraday and then backed off a little at the end of the day, up 269 yesterday. Standard & Poor's closed at a new all-time record, up 17 points. NASDAQ was up by 32.5 and set another intraday for themselves as well. It was just an absolutely crazy day. And that was kind of running in the face of two different events going in different direction. IPO charming is out again. Reddit's IPO started, and evidently, folks, you put two things together. Number one, TikTok being in jeopardy. Reddit has always been kind of a wild, wild west anyway as far as social media. They started out with a $34 IPO price, and they ended up at $50. Were they happy with that?
I think they probably were. They're going to slide down a little bit this morning. They're down about 1% before they get traded this morning. But still, that's a typical IPO with a hot stock like this. A nice little 48% increase in the first day. You got to think the shareholders like that, at least the original shareholders like that.
Yeah, I got to believe that. I mean, and like I said, it is good timing with one of the competing social media networks being kind of in jeopardy with the congressional arguments and moves on TikTok. I kind of wonder if this is just about the perfect timing for Reddit to say, okay, let's go public. There's a hole in the market now.
Yeah. Hey, you add that to Dave, we really do have quite a few earnings reports today that
All
we
right,
didn't get a chance to talk about beforehand. So let's start off with Nike. Nike's
let's do it.
more than a household name. It's a world known name, right? Everybody knows what Nike is. And they had a better than expected earnings and revenue. They were able to increase their North American sales and price changing up there, but the rest of the world, their sales started to slip a little bit, and they gave some soft guidance, thinking revenue is actually going to decrease this next year by a little bit. And so they're trading down almost 6% this morning.
I'm honestly kind of surprised you said their North American sales were their strong point after they parted company with Tiger Woods. I figured that'd probably take some of the bloom off of that rose.
Well, they're up. I think I saw North American sales were up 5%
Huh.
versus being up 30% last year, I think. So, yeah, not quite so good. But then we had one of your favorite stocks, Dave, Lululemon reported, and
Ooh,
they
overpriced pants. How are they
there
doing?
you go. They had a good quarter though. They came in at $5.29 a share on earnings, and that's on revenue of 3.2 million. And the expectation was for them to earn about $5 a share on 3.1 million, basically billion, basically. So they beat across the board. But again, like Nike, they gave some really soft guidance for this next quarter and actually the next year. Sales are struggling to even get back to where they were last year. So they're getting hammered this morning, Dave, down 13.1%.
Woo! Yeah,
Yeah.
I kind of get the feeling, given the macroeconomic reports we're seeing, we're going to get a lot of real pleasant surprises next quarter.
Well, and that could be, if they
Mm-hmm.
can make it happen. And the last one I have for you is another big household name, FedEx, right? They had a good quarter. They beat by 21 cents a share, came in at $3.86. Revenue, however, missed by a little bit. And so you would
Oops.
expect maybe they'd be down a little bit, right? No. They got a big hit this morning, Dave. They're up almost 11% from the close yesterday.
Try to figure a pattern out, and as soon as you figure one out, it goes to heck in a handbasket, doesn't it?
That's right, man. It does. It does.
Resetting the table yesterday was a nice up day. Wall Street was very happy still with a hangover from Wednesday's good news from the Federal Reserve that we're all kind of letting our bull crud detector go off on. 45 minutes before we open this morning, what's going on?
Hey, we got a tinge of red across the board. We've got the Dow basically flat. I mean, it's down $8. The S&P 500, same thing, pretty flat, less than 0.1%, less than $4 down. NASDAQ 100 down $28, which is between 1/10 and 0.2%. The big loser is the Russell 2000 down 0.2, but Dave, it had the best day yesterday. It was up 1.1% yesterday. So on the other side of the coin, we got silver down 0.5%, still below 25 at $24.88 an ounce. Gold down 0.4 to $2,176 an ounce. And crude oil going the wrong direction, up 0.25 to $81.27 a barrel.
I'm not sure that's not down a little bit from yesterday, though.
Actually, it's up about 20 cents.
Okay, I remember it was over 81 yesterday.
It's
I was recalling it
81.09
being
yesterday.
Okay. In other words, it is bad news. We'll not be happy then. Overseas markets, Europe is kind of in a profit-taking mode. They kind of followed our run-up, and they're saying maybe it's time to take some money off the table in advance of the weekend. Overall, European stock market is off, probably on average, I'm looking at about 0.5% on average across the different exchanges. That's Asian Rim, I'm sorry. European markets are mixed, and they are off in average by about 1/3% halfway through their trading day. Got my two cross the ponds confused there, but everything's red to a modest degree one way or t'other. Somebody want to stabilize a retirement fund, take advantage of some of the run-ups without taking as much risk on the downside. That takes a pro pair of eyes. How can I get a hold of you to take advantage of your eyes, Phillip?
David, give us a call at 863-382-0037 to walk through our core retirement design, where we'll help them design the retirement they always dreamed of. And then catch the Statler Financial Radio Show this weekend. Just went blank, Dave. 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
You just made me feel better. I just put the Gators on the wrong radio station during a sportscast about half an hour ago. Have a great weekend, my friend. Enjoy the pancakes tomorrow morning at Springapalooza, and I'll catch you next week, all right?
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us. Have a great weekend and join us back here next week. Take care. Bye now.